Ben Reppond. Welcome to my YouTube broadcast. Today is July 17, 2024. Last week, the biggest news was the assassination attempt on former President Trump. The market has responded, so far, has responded positively to that. That occurred over the weekend, so on Monday, the market so far has gone up. It could have gone either way, but as I've looked at past geopolitical events, I won't name them all, but I will say, including the assassination of President Kennedy, the market hardly lost a beat. The market, so far, it looks like, is viewing this as good news, and you could say that's because of that it looks better to those people who are his surviving, looks better to those people who are supporting Trump. There's another aspect to the market, and that is that the market likes certainty. It does not like ambivalence or uncertainty. So now there is certainty around, seems to be certainty around the fact that that's behind us, he survived. Whether it's positive or negative, usually the market will respond positively. So that takes us into the week of July 15. Okay, here are the dashboards. The first one, very unusual chart, because to the right, these green dots are represented that these 7 indexes, 6 equity and 1 long-term government bond, ETFs, are all above their 20-day, 50-day, 100-day, and 200-day moving averages, all of them above all periods. That is very positive. So it has been a while since we have seen this type of a pattern. In the yellow box are the gains or losses for this past week. The NASDAQ 100 lost a fraction of a percent. The biggest winner was the Russell 2000 small cap index, which was up over 6%. Year to date, the leader is the NASDAQ 100, and behind that, the S&P 500, and next is the emerging markets, etc. So basically, very positive past week and positive period for the last few months. When I take the S&P 500 and break it down into its component parts, the sectors, the 11 major sectors that make up the S&P 500, we look at those and see how they did, and I'm evaluating those based on the same thing, the 20, 50, 100, and 200-day moving averages. Again, to the right side of the chart, everything is green. Everything is above except for one sector, which is energy, which is above two of them and below 2 of them. Year to date, technology, financials, industrials, healthcare, etc. goes on down, but all of them are positive except for the telecommunications sector, which is still negative year to date by a little over 2%. This is the 2-year chart, the 24-month chart of the S&P 500 represented by the ETF SPY. And you can see going from left to right, you can see the, from, let's see, October, so this is getting us about 21, 22 months, and it continues to climb. So we're well above the 20-period moving average and going up. So again, a very positive chart. I take that and squish it down to 9 months. So 9 months of data. You can see from the, mid-October to present, that this candlestick chart, same thing, except put in candlestick form, a few weeks where it was negative, represented by a red candlestick. The rest of them, neutral or positive. So again, we're in a very positive period for the S&P 500. I take the NASDAQ 100, which has been very positive during this period, and compare that in a ratio to the S&P 500, SPY. So I put the NASDAQ 100 as the numerator and SPY as the denominator. So when it goes up, it favors, this is moving over a 24-month period, it favors the NASDAQ 100, and conversely, when it goes down, it's favoring the S&P 500. I flip it around just so you can see the magnitude of this, and I put the S&P 500 SPY numerator, NASDAQ 100 QQQ denominator. So when it goes up, it favors the S&P. When it goes down, it favors the NASDAQ. So again, you can see the magnitude of the advantage over this period of time that the NASDAQ 100 has had over the S&P 500. When you compare it to the Dow, it's even more exaggerated. The S&P 500 has both growth stocks and value stocks. So when I put this on a relative strength basis, the growth stocks are numerator favored over this 18-month period of time. When it goes up, it favors the NASDAQ 100. When it goes down, the growth stocks, when it goes down, it favors the value stocks. This, again, relative strength, comparing the S&P 500 SPY to IWM, the Russell 2000 small cap ETF. And again, when it goes up, it's favoring the S&P. When it goes down, it favors the small cap. Earlier, I showed you where the Russell 2000 small cap index ETF had a very favorable week this week, and you can see that at the very far right of the chart. When it goes down, that's the degree to which the Russell 2000 exceeded the S&P 500. Long-term government bonds still in a long-term downtrend. Maybe they are consolidating in the past, 8 or 9 months. Maybe they are consolidating and getting ready to move up. I don't know, but I would say it's still, at this point, still in a long-term downtrend. The dollar is still in a long-term uptrend. This is a 3.5-year chart. I've been reading things that say that the dollar is probably going to weaken from here. So if that is true, it wouldn't surprise me that the dollar will break below the 20-period moving average line and move on down for a period of time. But I don't know that for sure. Gold has been in it's over a period of, this is 2 years, over a period of 2 years, it's been in an uptrend. More recently, it's been in a shorter term uptrend. Gold is moving up and is strengthening. Silver, the same thing, except when it goes up, sometimes it exaggerates the moves up of gold, and not every time. This last week, instead of going up, it actually went down some, and you can see that from the tick down at the far right. But in general, over this 2-year period, silver has also moved up. I put a ratio here of silver to gold, and if it goes up, this favors silver. If it goes down, it favors gold. So over this 2-year period of time, even though there's been a lot of up and down, where gold is in favor, silver's in favor, and so forth, over that period of time, silver has outperformed gold because the black arrow shows that it has generally gone in an upward direction. Bitcoin was positive this past week, a little bit of tick up at the very end. It has been in a downtrend for several months, so we'll see if it starts to move up or not. This is not enough to tell me it is, but again, since late 2022, it's been generally in an uptrend. Volatility index, it continues to go down. So in other words, there's not much volatility in the market. And what that means is usually downward volatility of the S&P 500. So It was somewhat flat for this last week, and it's still in the 12 range, so 1240. So that's a very low level for the volatility index, the VIX. Asbury Research, their Asbury 6 measures the market from 6 different perspectives. All of those are positive, no surprise. The Asbury does a cross-asset relative performance chart measuring different, comparing different assets one to another. I look at, on the right side, the 3 major columns are, if they're green, it shows that they are, all 3 of them are going in one direction. So in stocks, what has been consistent for those 3 time periods, the last week, the last month, the last quarter, is high beta. High beta versus low volatility. High beta is in favor. On the bonds, corporate bonds are better than government bonds, and corporate bonds are better than high yield corporate bonds. Long-term bonds are better than short-term bonds. U.S. versus the world. So you see the first 2 major columns are, or excuse me, kind of in the middle 2 major columns are other countries are stronger in almost all cases except for the U.S. or over the U.S. In the final column, looked at from a quarterly standpoint, the U.S. is still dominant over most of those. So it's a shifting scenario. So the ones that are outperforming the U.S. are Taiwan and India. I've been doing this U.S. versus Thailand as a kind of a description on a relative strength basis. How strong is the U.S.? And the most consistent country that we've been stronger than has been Thailand. In other words, Thailand has been weaker than the U.S. Throughout this entire time period, probably more consistently than any other country. Gold and silver. As you saw, gold is up to 24.14, and silver is down slightly to 30.31. I've read a lot about this lately, and there are sources. I think David Hunter was one of them. I don't know if it was in this video or not that I did yesterday. That he's talking about silver going to 35, 36, maybe even $38 an ounce in the short run, and then gold going above 3,000. So that's just one person's opinion, but it does seem to be in a definite uptrend, and there seems to be accumulation on the institutional level of both gold and silver. Probably gold more than silver. Here's a monster box of silver bullion, just generic silver, and it is now $16,605. We got down in the 12,000 range, and it's moved up nicely, so it's now in the 16,000 range. That includes, that's 500 ounces in the monster box, and that includes the $2.40 markup. And the cost per round in that box is $33.21, including the $2.40, and that goes up 50 cents more, so it'd be $2.90 if that were in a quantity of just one tube. Thank you for watching. If you have questions or comments, leave them in the comment section below.